The TSX holding its own this morning. Of course, U.S. markets are closed. Let's bring in Paul Harris, portfolio manager at Harris Douglas Asset Management. Paul, great to see you as ever. What are you looking out for this week in the markets? What's top of your agenda?
Well, I think, you've got a lot of bank earnings coming out, right? So all the major banks come out over this next week. So it'll be interesting to see what they're saying. I saw, TD came out last week, but TD is slightly in a different category because of its U.S. issues and dealing with some of the regulatory environment. But I think it'll be interesting to see all the rest of the banks, ending with, I think, on Friday with the Royal, to see, what they're looking at. Are they seeing more kind of slowdown in the consumer or their business-related businesses, smaller businesses? Are they seeing a slowdown there? The other thing I think is what's happening with their increasing if they're putting more money for reserves. So I think it's really important to look at the banking sector. It really sets a tone, I think, for how kind of the economy is going to look like over the next several years. But I think that's really where if you're going to see if you're seeing a slowdown, and I think that a lot more economists in Canada are predicting we are going into definitely a slowdown, but maybe a recession. So I think that's going to be interesting to see, especially bank earnings, because it's a very large sector in this country, obviously, and a part of the TSX. So it's really important for us to get a better vision of where those things are going to be going.
Let's have a quick look at TD stock, because that stock hitting another high, at least its highest in at least a year. It looks like investors are buying back into the TD story.
Yeah, well, I think that TD went through this kind of very difficult period of time, and also because of their AML issues and stuff like that. And I think that you've seen new management come in, you've seen sort of people leave, you've also seen kind of them rethinking about their businesses and what's important and what's getting a better return on capital for them. And I think that's really what's driving the stock forward. They made some tough decisions. They got rid of their Schwab position. They are part of the Schwab position. They are, really rethinking everything. They made a lot of acquisitions in the U.S. particularly, and some of those acquisitions, although they felt they were good things to buy at the time, they really didn't put them in a kind of a level where they're, going to make a ton of return on equity on those businesses. And I think the other thing with TD, which is really important, is the fact that now they have a time to digest a lot of things, like look at their retail business in the United States, try to make that work more efficiently, because although they have a great franchise there, they've really not made the return on equity that I think people were expecting out of the business. And also on their investment banking business, when they bought Cowen, making sure they integrate those things properly. This is a great opportunity because they can't do any acquisitions anymore, certainly not in the United States. And they're probably very restricted in Canada to do any kind of major acquisition here as well. So I think it gives them a chance to really work on these businesses and grow them. And I think that's kind of showing what's happening with the stock right now.
And as you say, we are getting a raft of bank earnings this week. We're expecting Scotia tomorrow. And of course, that's seen as a repair story by quite a few investors. And then Thursday, CIBC, Royal Bank, and we have even more on Wednesday, Bank of Montreal and National. How are you playing oil these days, Paul? It's been tough. Oil prices down about 14% so far in 2025.
Yeah, and I guess it doesn't help. There's an article in the Financial Times of London talking about how all these fracking people those guys are just sort of saying, well, we can't really grow our business anymore. So I think one of the issues is that people wanted oil, the U.S. government wanted oil lower, because they wanted inflation to come down. But I think what you have to stick through with these kind of, when oil's like these levels, is these large players. We own CNQ. We think it's a great business. It's a great company. They've executed very well over the years. So I think in a company like that, where they'll continue to have reasonable cash flow even at these levels, they can still pay down debt. They can still increase dividends. They can buy back stock. So I think that's been what we've looked at with the oil on the oil side, is to own these bigger players as opposed to owning sort of mid-cap names in oil. So I think that that's really what where we like to be in oil. I also think that oil is probably at the low end of the range. I think you can probably see oil bump up over the next year or so. And so I think these buying these stocks at these levels will benefit you in the longer term.
Paul, as ever, great hearing from you. Thank you very much indeed.
My pleasure.
Paul Harris, portfolio manager at Harris Douglas Asset Management.